This lesson will talk about transfer pricing and shared services and how they are related. Okay. We'll talk about transfer pricing from the point of view of management control and to look at the rationale behind transfer pricing. Why is it relevant? Why is it important in management control systems? Okay. First, we discuss the rationale behind transfer prices. Okay. So the building of responsibility centers are oriented towards designing an optimal way to assign accountability. So that's what we learned in the previous video. Okay, responsibility centers are being designed so that we can assign accountabilities to different layers within the organization. And usually those accountabilities are molded into the organizational structure of a company. Okay. So some responsibility centers we also learned in the previous lesson are not easy to align, no? Especially discretionary ones. Okay, because the output is not necessarily it's not easy to know whether operations is efficient or effective. Okay, and we see that when you set goals for responsibility centers, we look at efficiency measures and effectiveness measures. Okay, so for example, let's have a typical discretionary the discretionary responsibility center, discretionary expense responsibility center, say the accounting function. Okay, there's no direct relationship between the performance of the organization and the output of the accounting function. Okay, so therefore we usually designate the accounting function as a discretionary expense center. No? However, it's difficult to put a structure on what is efficient and what is effective. And so therefore, in this lesson, what we'll see is how to transform discretionary expense centers like the accounting function from an expense center to a profit center using the concept of transfer pricing. Okay? So what we want to understand in this lesson is that transfer pricing is a way to transform expense centers into profit centers by making them accountable to a profit and loss statement, or to make them accountable in their own profit and loss. Since they are mainly expenses, you must create revenue items for these discretionary expense centers. And those revenues are in the form of transfer pricing. Okay, so we'll discuss more about transfer pricing in the next slides. So transfer pricing is a method of accounting for the transfer of goods. Okay. Accounting for the transfer of goods and services from one responsibility center to another. So if there are services or goods sold or services rendered by one responsibility center to another, there could be a price to those services. And that price is called the transfer price. And since those services are being priced, magkakaroon ngayon ng revenues ang lahat ng responsibility centers that's related to that provided services to another responsibility center. Okay, so the transfer price should, number one, provide each business unit with the relevant information it needs to determine the optimum trade-off between company costs and revenues. Okay, so ngayon ang mangyayari, si responsibility center 1 who's providing the service, iisipin na niya yung P&L niya, right? Si responsibility center 2 who's buying the services or using the services of responsibility center 1 is also taking care of its own P&L. So ito may revenues dyan, dito cost yan sa kabilang side, the responsibility center 2. No? So that dynamic, tension yan, right? There's a tension between RC1 and RC2. And hopefully that tension, no, will allow RC2, for example, to optimize his operations. Dapat ba kumukuha ko ng services kay RC1? Or dapat i-outsource ko na lang ito sa ibang supplier. Kasi baka ang mahal pala ng sigil ni RC1. Okay? Si RC1 naman, since he's taking care of his own P&L, right? Yung revenue pricing niya, kailangan rin niya maging competitive. Kasi may mga alternative si RC2, right? Pwede siyang kumuha ng services sa ibang supplier. And so therefore, RC1 is also forced to be more efficient so that he can compete among the suppliers of RC2. Si RC2, ganun din, nafe-feel niya yung P&L pressure. So the assignment of P&L to both RC1 and RC2, or the accountability for P&L for both RC1 and RC2, are providing the tension required to force both of them to be more efficient. Okay? And therefore, it allows RC2 to have choices, optimum trade-off. Kukuha ba siya kay RC1 ng services o kukuha siya sa labas? Si RC1 may trade-off din. Magbibenta ba siya kay RC2 o baka naman pag sa iba niya binigay yung services niya, mas okay. Okay? That RC1 can in fact be the accounting department, for example. Pwedeng maningil for services si accounting department sa isang business unit. Right? So, nagkakaroon ngayon ng trade-off or tension within the company. Competitive tension which results in efficiency in operations. Okay? Now, the key is that the transfer pricing mechanism should induce goal-congruent decisions. Okay? So improving responsibility center profits will also improve company profits. That's what we want to do. So there should be a mechanism to ensure that that decisions are goal congruent. Okay? It should help measure the financial performance of the individual responsibility centers. And that financial performance is in the form of profit and loss. The system should be simple to understand and should be acceptable to tax authorities. Tax authorities have a particular emphasis on transfer pricing because there is a risk that transfer pricing are not arm's length. Being accountants, I know that you know what arm's length means. Arm's length is simply hindi siya simulated transaction. We are talking as not relatives or within the same group, but as customer and supplier. So that's what an arm's length transaction is. And tax authorities always want to make sure that those transfer prices are arm's length. Okay. One fundamental principle of transfer pricing is it will only work, okay, if business units are allowed to have sourcing decisions and transfer pricing decisions. Meaning they're allowed to do that at hindi sila fino-force ng kanilang head office na, kumuha ka from our code division ng iyong mga inputs. So, walang sense ang transfer pricing kung ganun. Right? Fino-force din, kunyari kanina, si RC1 tsaka RC2. Diba? RC1 provides services to RC2. If this provision is forced, and RC2 really does not have any sourcing decision, meaning hindi siya talaga makakapag-decide na kumuha ng ibang supplier, then transfer pricing won't work. Because RC1 won't be motivated to be more efficient kasi forced naman kumuha si RC2 ng services niya. Si RC2 naman, hindi na siya maghahanap ng ibang supplier, tatanggapin lang niya yung cost ni RC1. Wala naman siyang choice eh. So the efficiency that we want to achieve from transfer pricing will not be realized if the departments or the responsibility centers are not allowed to decide where to source their inputs. Okay? So, therefore, kung ako si RC2, okay, I have a classic sourcing decision, right? Where do I buy? My inputs. Siyempre, meron kang iba-ibang sources, right? So, should the company produce the product or purchase it from an outside vendor? So, this is similar to the buy or manufacture, make or buy decision in your management accounting class, right? We are just applying it in the context of transfer pricing. Okay. And also, RC1 should be given freedom to decide the transfer price. Okay. Otherwise, walang motivation si RC1 to be more efficient. Kasi okay lang naman eh. Hindi naman siya penalized. Kasi wala siyang PNL na inaalagaan. Okay? So, what will be the minimum transfer price for RC1? Okay? So, that's something that we will discuss later when we talk about the relevant costs related to transfer pricing. Okay? So, the fundamental principle is that transfer prices should be similar to the prices that would be charged if the products were sold to outside customers, which means the selling price here is not forced, okay, but is based on a market price. Okay. And therefore, for market price to happen, the pricing between these two entities must be arm's length. Okay. So ideally, this pricing should be based on the market price. Okay. Market-based pricing is the ideal situation because it will induce goal congruence. Okay? Kasi kung si Responsibility Center 1, ang pricing niya based sa market, ibig sabihin siya, kailangan niya maging efficient so that he will be able to compete with others in the market. Okay? So of course, market price-based transfer pricing will induce goal congruence if all of the following conditions exist. Number one, competent people, good atmosphere, meaning the environment is ripe to force usually discretionary expense centers to have a profit and loss mindset. Okay, they should understand that there should be a market price, which is the frequent problem for some services, Some services, kunyari accounting services, minsan walang market price yan. O kaya financial modeling services. Well, may market price yan kasi may mga consultants. Right? So ito, baka may market price yan. Accounting, may market price siguro. But for example, Responsibility Center 1 provides a very particular service. Halimbawa, new business development. Meaning sales. Not sales, but M&A, mergers and acquisition na nag-aanap ng bibiling kumpanya. Yun yung pinoproduce na or binibigay na service ni RC1. Mahirap presyohan yun, right? Probably there's very little market for that. Okay, so mahirap mag-price. So therefore, hindi ka makapag-market price-based transfer price. Okay? Again, a very critical component of transfer pricing is the freedom to source, meaning to have delegated authority to decide on where to source your inputs if you're RC2 in my example kanina. It links back to controllability. Nag-transfer pricing pa tayo kung wala naman akong control over where to buy. Right? And if there's no control over where to buy, why would I be motivated to look at the P&L or to protect P&L? May mga items dyan, hindi ko naman kontrolado. Right? And so therefore, it links back to controllability and motivation, the freedom to source. Okay. Another is full information, right? I should be given full information if I'm the buyer. Hanggang saan tayo pwede mag-negotiate? Alin ang walk-away price mo para ma-consider ko yung ibang source ko. Okay? So just like external sourcing, negotiation should also be part of the environment. Just like when you talk to an outside supplier, I should be also allowed to negotiate with internal suppliers. Okay? Now, of course, naturally, there's constraints on sourcing. Okay? The one is what I alluded to kanina. There could be limited markets, meaning mahirap magpresyo kasi wala namang ibang gumagawa ng internal service na ito. Right? So, the existence of internal capacity might limit the development of external sales. Walang ibang magbe-benefit out of this service that I'm giving. No, new business development nga, for example, or contract drafting, or something that's very technical na ang magbe-benefit lang yung kumpanya na ito or yung department na ito. Right? So, limited markets. Since it constrains sourcing, baka hindi masyadong effective ang transfer pricing in that sense. Okay? Pero for example, packaging services, just like our example for URC in the previous video. Okay? Packaging services is something that I can offer to a lot of companies. There are a lot of markets for it. And so therefore, right to make packaging a P&L center, a profit center. Right? Kasi madaling ibenta yung kanyang services sa iba. No, and therefore meron siya ngayong decision, do I use my resources for internal customers or I can earn them elsewhere? No? If I can earn them elsewhere, then probably that will make the overall sales of the company better. Okay. Of course, excess or shortage of industry capacity is also a constraint. Now, sometimes there's simply excess capacity and therefore there's no market for third-party sales or external sales. No, so wag ka na lang mag-transfer price kung ganon. Okay? Transfer prices should always be based on competitive pricing. So the transfer price that best satisfies the requirements of the profit center system is a competitive price. Kasi it being competitive, it contributes to it being arm's length. Ano ibig sabihin ng competitive? Competitive yan if you subjected it to a bid process, for example, or you subjected it to publishing the prices in the market, getting quotes, right? No, and then nanalo talaga yung iyong kumpanya, right? Nanalo yung inyong RC1, si RC1 kanina nanalo siya sa bidding. No, and therefore you are assured that that price is competitive kasi sinubject mo siya to market bidding. Okay, and also assures that the pricing is arm's length or proves that the pricing is arm's length. Now, sometimes since market prices are not available, yung transfer pricing is based on cost. Okay? So what is the usual cost basis? The cost basis is the standard cost, obviously. No, and for you to be able to get the standard price, so cost plus a profit margin. Right? So cost is the standard cost. Profit, iba-iba na yan. It could be a markup. Right? So pwedeng percentage of cost or percentage of investment. So iba-iba na yung pag-calculate ng profit. So pwedeng desired gross margin. No? But the point is, the starting point is the cost. A certain profit is put on top of it or added on top of it. Okay? So kung iisipin mo, if you're the buyer, what are your options if you are the buyer? Buying department, for example, in a transfer pricing scenario. You can source internally, right? And you can buy based on the transfer price. Okay? Or you can also source externally based on the market price. So those are your choices, right? If you're the seller of services in this case, and therefore, ang decision mo is saan ka magbebenta. You can sell internally based on the market price. Based on the transfer price. You can also sell externally based on the market price. So kung makikita mo, yung buyer, because meron siyang ibang choice, pwede siyang mag-source externally, may opportunity siya to improve P&L. Right? The seller can also sell externally and therefore can improve P&L. Right? So yun yung idea behind transfer pricing. We are transforming through the transfer price, it is a mechanism to force buyers and sellers within the organization to be more efficient. Okay? Of course, this transfer price, an essential element of that, which we have discussed, is negotiation. Because that makes pricing competitive, right? So what is the negotiation range that we should consider for transfer prices? So let's have this example. Let's look at this hypothetical transaction between two departments within the same organization. One is the selling department, one is the buying department. So kanina, if you want to parang parallel it to our situation a while ago, selling department is RC1. Selling department is RC1. Buying department is responsibility center 2. Okay. So RC1 sells something that is the direct material of the buying department. Okay. So the selling department, its selling price is $20, 20 pesos per unit. Okay. Its total or its full cost is 14.5. That's the product cost per unit. Okay. What is the component? Direct materials, 5 pesos. Direct labor, 7. Variable overhead, piso. Fixed overhead, 1.5 pesos per unit. Okay. So therefore, in total, variable costs, full cost or product cost is 14.5. Okay. The buying department, on the other hand, sells its products to external buyers, okay, for 40 pesos. Ang full cost niya 33. Saan nanggaling yun? 20 pesos direct materials, which is exactly this one, right? Yung selling department, yun yung buying price ng buying department. Direct labor is 8, variable overhead is 3, fixed overhead is 2. Therefore, full cost is 33 pesos. Okay. Now, the question is, if the option of the buying department is to buy the same product for $25, 25 pesos from another supplier, what will be the decision of the buying department? So if you look at the buying department, what is its options, right? Buy externally at 25 or buy internally at 20. So therefore, his decision will be to buy internally. Let's look at the selling department. He can sell externally. Okay. 20. Okay. Yun naman talaga yung selling price niya. Or sell internally. 20. Kasi yun naman talaga yung selling price niya. So, indifferent siya. So therefore, what the decision will be to buy. Right? Now, let's have an alternative scenario. What if may mas murang alternative? 15 pesos lang. Okay? Right? 15 pesos lang yung alternative. So let's look at the options of the buying department. Okay? The buying department externally can buy the input at 15 per unit. Internally, it can be bought at 20. So therefore, he will go externally, right? So if ganyan, nakakatipid ng 5 pesos ang ating buying department. Okay? However, if they don't negotiate, hindi natin alam kung optimal ba for the whole organization yung decision na yan. So dapat there is an opportunity for the selling department and the buying department to still negotiate at para ma-match na yung 15. Okay? So si selling department, mamamatch kaya niya yung 15? Is it something that is also something that he can match? Okay? Let's see. Okay? If the selling price is 15, okay, ano ba ang minimum price, no, at which the selling department will be willing to sell? Okay, so parang special sales problem in relevant costing. So under the special sales problem or special order problem, what is the minimum price ba that you should be willing to sell? Okay, the minimum price that you should be willing to sell should be equal to the variable cost. In this case, what is that? That's 5 plus 7 plus 1. So that is 13 pesos. So that's the minimum price that he is willing to, that he should be, that the minimum price that he should accept for a special sales order. Okay? Si buying department naman, syempre hindi siya pwedeng tumanggap ng more than 15. May option siya na 15 eh. Okay? So what is the negotiation range between the two? The negotiation range is 15 pesos to 13 pesos. They can talk to each other. And if they talk, they can agree na, okay, special sales tayo 14. Then it will be optimal for the organization. Okay? Ngayon, for example, the selling department has an option to sell to another party at 20 pesos. Ibig sabihin, pwede niyang iwanan si buying department and he can sell his goods to an external party for 20 pesos. Okay? If that's the case, there is no negotiation range. Kasi the minimum that the selling department will be willing to take is 20. Kasi relevant na sa kanya yung 20 pesos na makukuha niya when he sells outside. Right? 15 will not cut it because he can sell the same at 20 with the same variable cost to an outside department or to an outside entity. So in that case, there's no negotiation range. Okay? Ngunit kung wala itong scenario na to, this one, yung binubura ko, kung wala yan, then there is an optimal range for negotiation, which is from 15 to 13 pesos. Okay? And they should negotiate between that range because it is best for both the selling department and the buying department to do so. Okay? The only problem is, baka magka-problema sa tax authorities kasi ito, nagiging hindi na arm's length yung pricing. Okay? And so therefore, that may run into tax issues. So yun lang yung isang constraint when it comes to transfer pricing. Okay? Now, the third scenario is what if the selling price is 10, no deal, right? Because the selling department, ang kanyang minimum price is 13, which is equal to the variable cost. Eh kung yung other party, the buying department can obtain the same product at 10, wala silang negotiation range. Okay? So that's how the transfer pricing should be implemented. Okay? So one application of transfer pricing is for corporate services. Okay, if you remember in 117, one of the things that we did for corporate services is we allocated it to different departments, right? So for example, accounting, IT, part of segment reporting, what we discussed is cost allocation. So based on cost allocation and based on usage, the headquarter costs will be allocated to these different departments. Okay. Under that setup or under that design, the corporate services are regarded as discretionary expense centers. There's no transfer pricing involved there. Okay. So if you do that, there's no transfer pricing, simply there's allocation. Okay. What's the advantage? Of course, it's simple, right? The allocation enables the calculation of cost prices of goods and services. No? Kasi ang mangyayari, yung allocated costs from the HQ will be part of total costs that must be recovered in the selling price of each department's products. So, and therefore, it updates the full cost of the product that's being sold by different departments. The allocation raises managers' awareness of the service provided, but they don't have any control over it. That's one issue. Okay. Allocation creates a healthy tension between central and non-central managers. Okay, but we know that the non-central managers are just accepting those costs. They don't have any influence over it. So there could be tension, but they can't do anything about it. So that those are the disadvantages. Okay. And another disadvantage is those allocations may be perceived as a type of corporate tax, meaning pinapayaman lang natin yung head office. Nag-allocate lang sila, nag-allocate tayo na tayo nagbibigay ng funding dyan. Right? They are not accountable for their actions. They're just taxing us. That's what the different departments or different brands, for example, or business units will feel. Okay? And so therefore, there's room to use transfer pricing for corporate services. Okay? Kasi pag nagka-transfer price ka at binigyan mo ng sourcing decision accountabilities yung different business units, then they feel that they have more control over corporate costs. And so therefore, empowering them, right, over those previously na allocated lang na corporate costs. Okay. So two types of transfer may exist. So for central services that the receiving unit can at least partially control, and for central services that the business unit can decide whether or not to use. For example, accounting services of corporate. Okay. Kunin ko ba yung service ng corporate or hire na lang ako ng sarili kong accountant at ako I'll do accounting on my own. Those are decisions by the business unit on how to source the corporate service, right? Pero merong mga accounting na hindi pwedeng mawala or makontrol ng mga business units. Halimbawa, consolidation sa parent, wala ka na magagawa doon, kailangan mag-consolidate sa parent. So that's a service that kailangan talagang gawin. Right? And so therefore, business units have partial control or limited control over it. Okay. So for controls over the amount of service, the business unit manager cannot control the efficiency of the activities of IT, R&D, accounting, but they can control the amount of the service received. Diba? Pwede niyang sabihin, wag ka nang mag-accounting dito. I mean, kukuha na ako ng sarili kong accountant. No, so yun yung level of control of a business manager or a business unit president, for example. Hindi niya makokontrol yung efficiency ng accounting department because they're not reporting to him. But because he can control the amount of the service, gaano karami, then it can pwede niyang ma-force yung IT to be more efficient. Okay? So of course, optional use of services also provides some control to business unit managers. So nabanggit na natin yan kanina. And the simplicity of the price mechanism or the transfer pricing mechanism. Because of this, na yung mga shared services, yung mga corporate costs are now becoming sort of profit centers, the era of shared service centers arose. Okay? So shared service centers are a subset of non-core business function, and we concentrate it together, combine them together into one business unit. So dati, headquarter costs lang sila before. Ngayon, they are being aggregated together and asked to become a new business unit, right? So common non-core business functions are HR, accounting, legal, IT. Okay. The idea behind pulling them together is it generates the economies of scale. When you centralize everything, there's scale. Right? And then if there's scale, there are efficiencies. Those efficiencies translate as savings for the company. Okay? It improves also clarity about strategic alignment. For example, HR management. Probably there are a lot of corporate level HR strategies. So pag hiwa-hiwala yan, hindi nagre-report ng mga HR na yan sa HQ. And so therefore, policies might be different across different organizations. Way HR strategies are implemented, or the HR strategy itself might be different across different organizations. But if you want to centralize it, there's clarity on alignment. It has to be in a shared service center. Okay. Because it is a service center, HR, accounting, legal, and IT therefore now have a customer centricity focus. Dati kasi, Walang customer centricity because wala naman sila, expense lang sila eh. Pero pag may P&L responsibility sila, dapat yung kausap nila masaya, right? Because they're charging them a specific amount for services rendered, right? And so therefore, it increases customer centricity of these areas. Employees to build up specialized knowledge kasi yung non-core nandito na sa shared service. Okay? May fail or cost more than planned. Okay? Kasi it can become more expensive, especially if technology is involved. Okay? Now, what's the management control systems and shared service? Okay? Shared service centers are operated as either expense centers or profit centers. Most likely or most frequently as profit centers with full responsibility for the financial performance and quality of services. And therefore, they're expected to behave like a business unit. So if they're expected to behave like a business unit, they have P&L responsibility. They also have strategies. They have to strategize on how they can help their customers better, right? They have to market their services to these different business units na useful yung gusto nilang mga technology improvements. Okay? So now these non-core services now become core or important parts of the organization since they are integral in strategy because we provided them with profit responsibilities. Okay. Now, in a shared service center, even though it behaves like a business unit, the top management is still very important. Okay, because the top management needs to determine ano ba ang core, alin ang non-core activities ng bawat business unit. Kasi kung core activity yun ng business unit, baka dapat hindi nilalagay sa shared service. For example, receivables, collection, for example. Baka yung collection, core responsibility talaga ng mga business unit, so baka hindi siya sinicentralize. Okay, pero accounts payable, baka non-core yun. Kasi wala namang special na accounts payable steps per business unit. Pero yung receivables, meron yung element ng customer, may element yan ng customer management, right? If you collect from your customers. So it might affect strategy. Hindi pwedeng standardized yan. And so therefore, it could be, although it's financial, it could be considered a core activity and therefore not part of the shared service. Top management needs to explain and justify why shared service centers are implemented. What's the strategic rationale? What will be the benefit to the business units? Okay, and what are the financial benefits for the whole company? I think that should be clear. Okay. Decides if the business units are permitted to purchase support services outside the company, which is very critical as we have mentioned. And decides if the shared service center is allowed to sell services outside customers, which are also critical decisions. Okay. The key issue is determining the level of service the business units are willing to pay for and the price for the services. So dito na lumalabas yung cost, right? So there has to be a pricing mechanism, whether that's market-based, cost-based, competitive costing, right? And those prices should be commensurate to the services that they are providing. So there should be a balance between service quality and cost. So the services and the service quality of the shared service center and the cost is usually embodied in a service level agreement. So kontrata yan ng business units. Okay, kontrata yan between the shared service and a business unit. It specifies ano-ano ang serbisyo ng business unit at what cost. Okay, at yung mga serbisyo na yon may minimum quality standards yun. There's a service level that's required. Hindi pwedeng bara-bara. Pag sinabi ang AP, babayaran within 3 days, dapat 3 days. So may KPIs pa rin yan. And so therefore, may responsibility centers within shared services. Okay. Now, one problem with respect to responsibility centers is the agency problem again, or problem with shared services. Okay. Is an agency problem again because you're splitting up the firm again. Remember, agency problem, may misalignment of goals and objectives. If you split up a firm into more responsibility centers, including a separate P&L profit center for shared services, then it exacerbates the agency problem. So you need to be more careful about your responsibility center design. Another challenge is managing the service level agreement. No? What's the level that is required? How do you determine the price? And what if hindi nagbibigay yung level of quality of services that is within the requirement of the service level agreement? What happens? Is there any penalties? Is the business unit allowed to reimburse some costs? So that that exposes inter-responsibility center disputes. And another issue is transfer prices and tax. Okay, because ang sinasabi palagi ng tax authorities is that naabuso yung transfer pricing. And so therefore, tax exposure should be managed. Okay, that's all. Thank you.